I'm diving deep into the chaos of China's economy and trying to figure out exactly what's happening before it crashes completely. China's economy, once the darling of the global financial community, has been experiencing some serious turbulence lately. Just a few short years ago, the Middle Kingdom was on a tear, churning out double-digit growth rates and seemingly defying the laws of economic gravity. But those days are behind us, and China is facing some very real challenges. In recent months, the warning signs have been flashing bright red. From plummeting stock markets to cratering real estate values, it seems like every major indicator is heading in the wrong direction. And the scary thing is, this might only be the beginning. So what exactly is going on here? Is this just a temporary blip on the radar, or are there deeper structural issues at play? Well, that's exactly what we're going to explore in this video. China's economy is facing some serious headwinds, and it's not hard to see why. The country's debt levels have skyrocketed in recent years, with some estimates suggesting that the total debt burden is now north of 300% of GDP. That's right, folks, for every dollar of economic output, China owes $3 in debt. But debt is only one part of the picture. The real estate market, which has long been a key driver of Chinese growth, is also showing signs of strain. Prices are falling, sales are slumping, and developers are struggling to stay afloat. It's not hard to see why, given that many of these projects were financed with borrowed money. And then there's the global trade environment, which is becoming increasingly hostile. The ongoing trade war with the US has taken a severe toll on Chinese exports, and it's not clear when, or if, things will return to normal. All of this is happening at a time when the Chinese consumer, long the engine of domestic growth, is starting to slow down. Add it all up, and you get a perfect storm of economic uncertainty. The question is, how did things come to this? How did China's economic miracle turn into a potential nightmare? One of the key problems is that China's economy has been fueled by a massive surge in credit. In the wake of the 2008 financial crisis, the government unleashed a tidal wave of stimulus spending, which helped to boost growth but also created a mountain of debt. Fast forward to today, and we're seeing the consequences of that decision. The real estate market, for example, has been driven by speculation and easy credit. Developers have been able to borrow money at extremely low rates, which has fueled a construction boom but also created a massive bubble. And now that prices are falling, it's not clear how these projects are going to be paid for. Meanwhile, the global trade environment is becoming increasingly protectionist. The trade war with the US has accelerated this trend, but it's not the only factor at play. Countries around the world are starting to question the benefits of free trade, and that's having a major impact on China's export-driven economy. All of this is happening at a time when China's economic model is undergoing a major transition. For years, the country has relied on exports and infrastructure spending to drive growth, but those engines are starting to sputter. The government is trying to pivot towards a more consumer-driven economy, but that's a difficult process, and it's not clear how successful they'll be. One of the biggest challenges facing China's economy is the lack of transparency. It's often difficult to get accurate data on the country's economic performance, which makes it hard to gauge the true extent of the problems. And even when we do get data, it's often massaged to present a more rosy picture than reality. Despite all of this, China's government is still committed to meeting its economic targets. The goal is to achieve moderate growth of around 6%, but that's starting to look like a stretch. And even if they do manage to hit that target, it's not clear how sustainable it'll be in the long run. One of the most significant events that's highlighted the current economic situation is the recent stock market crash. In just a few short days, China's main stock index plummeted by over 10%, wiping out billions of dollars in value. It was a stark reminder of just how fragile the economy is right now. The crash was triggered by a combination of factors, including the escalating trade war and concerns over domestic debt levels. It was a perfect storm of fear and uncertainty, and it's not clear how quickly the market will recover. So what does this all mean for China's economy? Well, the implications are huge. If China's economy were to crash completely, it would have a major impact on global trade and financial markets. It would also have serious consequences for the Chinese people themselves, who have grown accustomed to a certain standard of living. In the short term, the government is likely to respond with more stimulus spending and monetary easing. But in the long run, China needs to address the underlying structural issues that are driving its economic problems. That means reforming the financial system, reducing debt levels, and creating a more sustainable growth model. In conclusion, China's economy is facing some major challenges right now. From debt levels to real estate woes to global trade pressures, there are plenty of reasons to be concerned. But by understanding the complexities of the situation, we can start to get a better sense of what's really going on, and what might happen next. Thanks for watching, and don't forget to share your thoughts in the comments below. And if you want to learn more about the global economy, be sure to check out our other videos for more insights and analysis.